Okay, so my name is Hussein Issa. To you, it is good. Exactly. We just started. I just told you my name is Hussein. Keep up. Wake up. Okay? No? Professor Issa, seriously, Denise? You danced with my son at your birthday party. So, yes, she did. So, no, you can call me Hussein. Uh, Today, it's not going to be just a one-way lecture. It's going to be interactive. Bless you. No problem. So we need to talk, all of us. Okay? Let's just very quickly, just tell me what you guys are, what's your research interest. I know many of you, I know the research of many of you. You want to know about the remaining people. This is one thing. The other thing, if you don't know what your research is so far, don't feel bad. We've all been there before. Just say at that point, I'm not sure yet, but this is the main idea, whether you're interested in auditing, in behavioral type of work, in XBRL, in capital market research, just say the big picture if you're not uh, decided yet. Yehuda, let's start. Well, is it capital market research? Is it you like to do nerdy stuff like I do? Is it governmental accounting? What is it? Okay. Abdurrahman, go ahead. Okay, good. One more nerd to add to the whole. Yes, go ahead. I know you like governmental accounting work and you have a transparency. Okay, Denise. June. Okay, ciao. Okay, Sofia. Christine. So audit research from, is it like what kind, if you have an idea, is it like behavioral work or is it like standard formalization? Maybe you would be also interested in later on learning about the audit data standard. I don't know if are you familiar with it? The audit data standard. The audit data standard. This is a new, those are the standards that are not mandated, but they are recommended to be used by, basically, they are recommended by the AICPA. I'll, I'll talk to, yes, basically it's like from last year. They are just released the exposure draft for a new standard. I think it was order to cash, right, Michael? For the, do you remember that for the audit data standard? I'm not trying to pick on you. Trust me. I don't dare do that. It was, I think it was order to cash. It used to be the base standard, then GM, and there was accounts receivable. Order to cash. This is my guess. We can, if you want, I can like send you those. Just remind me of this one. Yes. Okay. Yulen. Okay. Okay, just to let you know, I heard, I don't have any facts, but I heard that Fei Qi is dangerous. So ladies, be careful. This is why I got a restraining order so that he would never get near my daughter, just to be on the safe side. Just kidding. Okay. Okay, so you are an AI student, right? Are you working on a specific project right now? Okay. Okay. Still have a lot of time. Don't worry. Go ahead. Are you working with Helen at this point? If you're interested in behavioral auditing, you may also want to talk to Helen about this. Dr. Helen Brown. Yunsen? Okay. Um, have you all read the papers? You read the papers? I can't hear you if you. I don't read minds, not yet. I'm trying to develop that skills, but not yet. So, have you read the papers? Okay, so we can leave now. You've read the papers, so you know them. So let's leave. Now, uh, before we start, like I said, I want this to be interactive. So before we start talking about exceptional exceptions, I want to tell you like the story behind this, basically where we started from. So once upon a time, in a far-off land called the Carland. Get it? Carland, Carlab. Okay, so the Carlab, for those of you who are not familiar with that, this is the continuous auditing and reporting lab. Okay, so this is it. We do a lot of projects, applied projects, with companies sometimes, where we apply machine learning, we apply data mining techniques, we apply statistical models to identify exceptions. And then most of the time we deal with internal audit departments. You've read the paper, the example with Siemens, pilot test, and I know that several of you AI students are already working on stuff like that, where you apply classification, decision trees, etc., to identify those exceptions. Now, this is different from traditional auditing. So this is what we wanted to talk about. This is a little bit different from more than a little bit. So traditional auditing, what's the idea compared to continuous auditing? So how does continuous auditing change? Who can give me an idea? And I want accounting students, I won't be picking, I don't want to pick on anyone. However, I want accounting students to talk. This is not only for this, I don't want only AI students to talk. And just to let you know, we all make mistakes. So if you say something that is wrong, that's okay. This is how we learn. The important thing is that you don't keep saying the same wrong thing. So one big difference between traditional auditing and continuous auditing is related to audit by exceptions. What's a different thing? Okay, so it's not periodical, it's more often.
Ideally, it's all transactions are tested or analyzed post-exam.
Okay,
Ideally.
so you see what's happening here right now? This is exactly what I don't want to happen the whole class. Automated in certain cases, that's true. So basically, you have here with continuous auditing, what you do is you analyze the whole data. Rather than looking at a sample, rather than taking a sample and examining that sample, you're actually looking at the whole set of basically the whole data set. And at that point, with the whole this data set, you identify exceptions. So at this point, you're not looking at specific exception. You're not looking at specific transaction. What you're looking is at violations of certain rules, deviations from expected values or from benchmarks. Now, I don't know if you've all taken the auditing class with Miklos, right? Anyone did not take the auditing class? Yeah, audit seminar. Okay.
Oh, really?
Interesting.
Yeah, but it took them they've been office another 2 years now.
Okay. This is why I wasn't sure about this, and this is one of the reasons why I included those papers. If you have read the continuous auditing implementation by Siemens, and we have here one of the authors. So if you have any questions or you want to say anything, whether it was good or bad about the papers, direct it to Michael. Fair is fair. So the thing is that with traditional auditing, auditors would go to a location periodically. They start, especially after Sarbanes-Oxley, what do? You were an auditor, right? So go ahead, tell us. Okay, so give me like the big picture of how traditional auditing happens. Okay, how do you? It's not general, but this is true, and it's case by case. It depends on the client, depends on what their accounting system is, etc. And after SOX, you started also assessing controls, and this is what drives everything else later on, right? Okay, now with those controls, how do you usually assess them? At a certain period of time, at a specific point in time, this is where you're conducting the audit. Okay, so what happens if during the year, the user had switched them off? And right before you arrived there, they knew that you're coming on this date or in this month, they switched them on again. Okay, interim. How often? 3 months? Okay. But you're still taking a sample, right? Because you're not looking at everything. So what's the likelihood of actually catching them when they do that? It's very unlikely. So, I mean, this is the argument that we always talk about here. And if you had taken Miklos' class, you would have known what we're talking about. This is related to the first lecture that Miklos started talking about. And the idea here is that, okay, so if you're doing that periodically, you're taking a sample of 100, it's good when the whole population is 1,000. But when your population is in the millions of transactions, do you think that 100 is actually going to catch anything? It's already very unlikely to catch fraud. But when you have this large number of transactions, how likely are you to actually identify fraud? it's not very, it's not that likely. So continuous auditing in one way, this is where you apply analytical, basically analytical models, whether machine learning models, data mining. You apply statistical models to identify exceptions. So the trend here, we're done with the story here. So now we started with a background. The trend here is to start analyzing the whole population. And by the way, this is what a lot of internal audit departments do right now. And it's not something that's not possible. This is something that actually Miklos did in the 1990s, where they implemented when he used to still be working at, and I don't want to discuss this. Most likely he will be talking about this in the, at the end of the semester. But basically, there was this CPAS, which was a continuous auditing system that would look at all the transactions. You train the model. When we say train the model, basically what you do is you look at the previous history, and then you use that as more or less like a model or a benchmark against which you will be testing new transactions. So let's say, for example, that those. How would you know, for example, that you had a low, basically low sales numbers? How do companies know? Not necessarily auditors. How do companies know? Yeah. So just cash? Okay, so they look at sales. But then if you know that, for example, Apple made sales of, I don't know, $50 billion, is it good or bad? How would you know? You have to compare it to something. So you can compare it across companies. You might look at how other companies, Samsung, for example, and their phone division, how they are doing. You look at the previous years of Apple. You see whether their sales are going down or up. Well, if this is being done by marketing people and by management, why not do that also by auditors? And actually, this is what they do now. Internal auditors, in many cases, they do that. They look at all the transactions. They try to identify exceptions. Exceptions are simply any anomaly, any outlier, a number that does not fit does not fit a model, or that is different from an expected value. One of the projects, yes, go ahead. Benchmarking, that was for business. This was not for, well, auditors actually they do. Yeah, because they have other clients in the same industry. External auditors, I'm not talking about internal auditors, I'm talking about external auditors. And my understanding, I am not an auditor, but my understanding is that you do look across the industry. You look at similar companies, basically companies with similar size, etc. Am I correct? Go ahead, answer him. Don't look at me and not. Exactly. Well, this is also an anomaly. Well, internal auditors, they have access to transactional data. No. Internal auditors, they have access to their own data. Yes. No, they don't have. Definitely, they won't have access like Apple. They definitely won't have access to Samsung's data. But external auditors, they do have access to two different companies. You were going to say. This is you talk about internal auditors. Yes, this is why you always have. But this is why you also have rotation, right? So you have mandatory vacations by employees. At that point, let's say that I've been working there for a year or so, and then I go out for a month. During that month, the costs decrease. Then this is an anomaly. Why did there decrease? Or sales increase? Then why? There's something fishy around about this. Go ahead. Okay. And just to tell you about this from an internal auditor perspective, we received a data set once from Procter & Gamble. It was a data dump. And by the way, names of companies, they have to stay in this room. Now, Procter & Gamble, they sent us a hard drive, with 862 gigabytes. That was the size of the data set. That's a huge one. And we started analyzing transactions. Some of them were payments. So we were looking at payments, and then we found a payment for the amount of, I think it was like $660 million. One payment. And then it was canceled by another person. So this is not even comparing to other, basically to previous years. It's simply by itself, it is an outlier. You have most of the transactions are for the value of, I don't know, maybe millions. And this one is for $60 million. And then you had a super user who reversed it. So what do you think happened next? Because like when we talked to Procter & Gamble, we asked them if that super user had a certain limit, and it turned out that those super users, they can make or adjust or change transactions even for billions of dollars. Basically, one user has the right to do that. So what do you think happened next? No, I applied for that job, but they did not give it to me. I thought, I don't know, I would retire early.
Yeah, really.
Yeah, very early, but it didn't work. So I don't care. Just sign the check, cash it, and goodbye. But it didn't work. So here I am. I'm teaching you today instead of being a billionaire. What happened is that it happened several times. We don't know what happened. Apparently, the employee mistook the, like, rather than having 660 million, like 6.60, they changed the position of the period. You know, like between Europe and here, there's a difference in the period. So here, when you have it, or when you have the marker of the thousands is a comma. In Europe, generally speaking, the marker of the thousands is the dot. It's the inverse of here. And the marker of the comma is the marker of the decimals. So if you just mix them, then you might have a problem like this. And those transactions, they have to be reversed, etc. The important thing is that they have to be identified. If you were simply taking a sample from this transaction, good luck finding anything there. You're not going to find this transaction. And we found that there are certain people who always made mistakes. I was analyzing another, and the reason why I'm talking about those projects is simply to give you an idea of what happens with those, what we mean by continuous auditing, especially that some of you did not take the course. So this is what you mean by that. We were doing another project where we would analyze the whole population of the refunds from IDT across the street. That was payments, and it turned out to be that almost 25% of the payments were refunds. Does it make sense to have? I mean, you either have a problem with the controls, or you have a problem in your business model. To have 25% of the payments are refunds. Most of the refunds were small refunds, maybe like $10, $25, something like that. But we did have a couple of them that were for the value of 10,000s and 5,000s and 20,000s. So at this point, what do you do? So they were not those outliers. They were not illegitimate. But still, you need to know what's happened there. So when we talked to the auditors, it turned out to be that many of these were paid twice, basically like another vendor paid them twice. So those, they sell calling cards. Another vendor paid them twice, so they had to refund his payment. That's, again, that's not an issue, but you have to find what this is. The reason why I'm giving this example about IDT is that we started off by a project where we did duplicate payments detection. Okay, so the idea usual is that if you have duplicate payments, most of the people will tell you that our system does not allow for duplicate payments, right? Most companies, this is what they do. Yes, Denise?
I'm sorry to go back to when you talk about IDT and the high payments were actually legitimate because they were refunds of duplicate payments, right?
Duplicate payment to them,
Right.
not by them, yes.
So couldn't you build a layer, I mean, this expert system you talked about, you actually have part of that as part of your assessment of the control risk, right?
Yes, you can.
And so
But
how
this
would
is
you weigh
this is
that?
not a risk. This is you're getting money, more money than you
Right,
than it's mostly if they are afraid when they are paying the money. So they make all these controls when they are paying the money.
So they're paying the money to back to the client as a rebate, right? So then if you had this test go, okay, well, is it the refund of the money was
Oh, I see. You mean
you would weigh it lesser, then it wouldn't even come as a alarm, perhaps, or as
this is the thing. Their system was not, according to them, they never, they don't have any duplicate payments. And actually, we did find duplicate payments. They were for the amount of $10. But still, if you were able to do it for $10, you can do it for more. So with duplicate payments, let me give you an example of what these things happen. You analyze the whole data. There are certain small things that might let a duplicate payment pass. According to most companies will tell you, no, we have a system in place that would prevent it from happening. Not true. Not always. And you have agencies who do that. So with that data set that we started, we ran an algorithm, a rule-based system basically, to identify those exceptions. And the exceptions in that case were any pair of transactions that are very similar. So they are not exactly the same. There is a small difference, but they are very similar. If they are very similar, think about it as suspiciously similar, then the auditors are expected to investigate it. How many can you investigate? So for the first, we had 2 data sets. The first time I sent them the results, they were like 893 duplicate candidates. We call them duplicate candidates. They immediately sent me back the data set telling me, oh, this is too much, we cannot investigate them. 893 transactions, there is no way we can do that. Give us better numbers. And the question was, what do you mean by better numbers? Do you mean that lower numbers are always better numbers? They said, no, we need something that we can manage. Eventually, they wanted 33, something below 100. No matter what, they wanted below 100. But what about the remaining ones? They were suspicious. At certain points, they would tell you that if the transaction is below $2,000, for example, don't look at it. But that doesn't make any sense, because if there is a duplicate payment, even for the amount of $10, what does that mean? Sorry?
The system can allow otherwise.
Exactly. So this is a control weakness. This is a weakness in the system, that someone can circumvent that one. Now, and this is for a company that is like IDT, where they don't have so many invoices, etc. Rod Brennan, who is from the risk officer of Siemens in North America, and sometimes he teaches for us. He always gives this example. They installed continuous control monitoring system, and the first time they ran it, I think they got like 10,000. This is what he said. I think it was Jason also who said it, that they had like 10,000 duplicate candidates. What do you do with that? Yes?
They would now, like in the most recent conference, they were saying that they have 100 auditors receiving alerts. That's how many alerts they get from the system.
I will go over that one in a second. So basically, this is the idea. You have all these, you're analyzing the whole population. So now we have established that continuous auditing, what you do is you do it more often. You analyze the whole population, not just a sample. You test the whole thing. Look at the whole thing and try to identify any exceptions. Again, exceptions could be something as an anomaly. It could be a deviation from a model or a benchmark. It could be something simply suspicious. So you look at them. how do you deal with 10,000 exceptions? How do you filter it? This is the thing. Are you going to simply, right now, they do one of two things. But you also lost everything below.
Yeah, but the big picture would, I don't know, you can't afford to look at each one unless you develop the system.
But this is one of the problems.
Then you try to modify the system.
One of the problems is that if you identified the exception and later on there was fraud and you did not do that, you are basically, they will sue you. You found the exception and you didn't do anything about it. So how do you deal with it? Yes. So basically what you're doing is you are processing those exceptions. Okay. What do they do right now? Right now, they take sample of those exceptions because they can't deal with them, or they switch off the system. No, seriously. In many cases, they are not actual duplicate payments, but they are very similar. However, there are ones that could be actual duplicate payments. So let me give you an example of how this happened. And I think that was an example given by Jason once, and this Jason is from Siemens. This is an actual case. They had been paying the same vendor multiple payments for a while. How? The process used to be to speed up the payment. The vendor would send them, their supplier would send them an invoice by email. They would scan it, or by fax, let's say. So they would scan it and send it to them. And then later on, they would send them the original hard copy. Now, the system is supposed to look at it and see that this is the same invoice. As a result, mark it as paid. But the system was not seeing that. Why? Give me an example. Sorry? What? It's a scanned document. They scanned the same document and they sent it. So what happened? No. Then later on, a user would take the actual copy of the scan. It's not automated. So what they used to do is, let's say, they would receive the scanned copy, the fax copy. They would enter it in the system. Someone manually enters it in the system. One time, it's okay. Multiple times, it means collusion. There was no collusion there. Anyone would like to guess? Yes? Nope. It turned out to be that there was a piece of dirt, basically dust, on the scanner that they were using to scan. So as a result, when they scan the invoice number, one digit of the invoice number was being hidden unintentionally, but it was being hidden by this piece of dust, this basically broken fax machine. So instead of reading it as the same number, the system will read it differently and will accept it. And that one went on for a while until they discovered it. So this is simply to tell you that a lot of things can happen, and you might end up with all these duplicate candidates. Yoda. But there are a lot of payments that are recurring. You have rent. For example, you have Xerox machines. You know the Xerox machines? In many cases, the invoice is basically a recurring payment every month. Yes, but a lot of people, they are happy that they are receiving more. They thought maybe that this was a gift or a bonus for being a good vendor. I don't know. That was the same question. Well, not everyone is honest. I mean, sometimes even the other company may not notice it until later on. It's like with IDT. They did not notice that they had refunds until later on, basically that there were payments until later on where they had to actually refund the money. And they did, but it was months later. Go ahead.
So when you search the transactions, you're looking for similar amounts. Well, my question was basically how would you end up with duplicate payment of not exactly the same amount?
The amount was the same.
Right, so I'm saying,
Oh, but sometimes you have split payments. This is much harder to capture. So, for example, you know that you have that. This is different. It's not a duplicate payment per se, but this is for when you have a limit on payments. So you cannot make a payment. But what do you beyond or like over or basically above $5,000? So what do you do? And you need to make a payment for $7,000. Like 3,500, 3,500, and you're good.
there's no time window on the limit, what's the point of the
But there
limit?
should
It
be
depends.
those time limits.
But this is, it depends. It depends on each company. This is very, very unique to each company. Each company has their own credit limits. They have their own systems. And you talk and certain companies, smaller ones, they don't have someone to approve of it. So segregation of duty, while we all think about it as something that is happening or something that is kind of we take it for given, smaller companies, you have definite problems of segregation of duty. And you can have you encountered like a company where you had issues with segregation of duty? Exactly. No. This is true. So now, with all these transactions that happen, and when you think of it, many companies right now, they still do manual work. For example, Denise, care to explain a little bit about the iLisa?
Oh, Lisa,
Yes.
yes. Amazing. You have one of the largest multinational consumer goods companies in the world. They make everything from consumer cleaning supply, personal care goods, pet food, pet products, household cleaning supplies, and they were actually taking all their procurement cards, which are basically the cards that employees are allowed to spend for repair, maintenance, operations, basic everyday expenses that they have in departments, and they were given credit cards with supposedly enforced limits, and the internal auditors would manually analyze all the transactions every week, every month. 55,000 transactions on average. You can imagine they all have about 150 attributes, and she was really bogged down, and just the mind after a while probably gets, it's totally information overload basically. So we were asked to basically automate her procedures in this project, which is called iLisa, because basically we took all the exceptions and all the rules that she uses and built a huge decision tree based on these rules. The one problem though is that her knowledge was flawed because she was overloaded information-wise, so she didn't catch everything. So there was probably, it was only really, actually when they still analyzed all the transactions which were flagged by the iLisa, there's still a high false alert rate.
Yeah. And so the thing is that with that system, I remember at the beginning when they said like automatically the system will decline any, and that, by the way, those procurement cards. This is a project with Procter and Gamble, and those procurement cards are monitored by Citi.
Citibank, yeah.
Yeah.
Citibank would not enforce the limits. We had transactions where, let's say, the person had a limit $75,000 per month, and they'd have one day where they spent $500,000, many different transactions, but the overall limit was unenforced by Citibank.
Yeah. This is one of them. Like this is you had to check. So although you have supposedly a very good control system by Citibank, it still wasn't that effective. And there were certain cases where, like, for example, they would say that they would not allow any transaction that has to do with alcohol. We did found some of them that would say winery. It would say, for example, you would have like, and they said that okay, so those were special cases. For example, it was a party, something like that, where the person who bought them, it could be that they were allowed or not, but the thing is that they were saying that it's not happening, and it did happen. Same thing with massage.
Yeah, exactly.
They were saying that they don't allow massages, etc. Well, then what about all those massage towels and stuff like that that they had? Someone purchased them.
Or the massage wand. I think the salon they had a lot of high-end salons where they tested hair products and
Yeah.
everything. So they said this was like a legitimate expense to have a massage wand.
But at that point, the point here is that the internal auditor, which was a human person, could not even catch those, although she had to eyeball all that every day, and she couldn't, 55,000, and she could not see those ones. It's simply not possible to see all that amount. She was overloaded. So
What comments are real-time continuous basis came in a huge batch at the end of the month. Actually, they would get the data from Citibank at the end of the month, and she would receive it maybe like a month later.
yeah.
And then there's like another 60 days analysis of capturing some of what they consider fraudulent until like 90 days after the transaction.
And then after the system that basically it was Denise and Abdullah they were working on, they developed this rule-based system based on the expert knowledge. They started identifying exceptions using, for example, it used like a rule-based system, right? So the idea here is that you have all these exceptions that humans, they suffer from. And like we said, there are a lot of techniques that are excellent at identifying exceptions. So you can find all these exceptions or anomalies or outliers. There is still a problem. How do you deal with those large amounts?
Well,
Denise.
another big problem we had is almost half the data is missing the first side information, which is another part of the project we're still
Yes.
working on. So if you have all these rules where the essential information is the employee, where they work, and what they're, whether they're approved vendors to go shop at and what they purchased, and you're missing that part where what they purchased is not available online, it's not provided to the credit card bank, and therefore not to the company. How do you know what they bought? And Walmart, for example, is one of the major vendors that everyone goes to in these credit cards, and we get like a transaction for $2,000, no information.
You don't know what they bought.
How, I mean, so we're working on that whole other part.
And this is, in this point, you have basically how do you audit this transaction? You have a transaction for $2,000, but you don't know what they bought. Did they buy something for actually for work, or did they buy groceries for their house, or they bought, I don't know, a coffee machine?
Right.
You don't know. So this is the problem. At that point, you have to use different, like you were doing profiling. So they try to find profiling. Now, just like we said, auditing in many companies, especially internal auditing, they are moving towards a model of audit by exception. So at this point, if the transaction has certain issues, you would automatically identify it. Now, what's the problem? I just mentioned it. Come on, I want someone from this side. You are awfully quiet today. So overload. So you have information overload because you have large number of transactions. And at the end, you become like this. That's the auditor having to deal with all these exceptions. That's your office? You have an invasion of papers? Yeah. That's why I don't have papers. All my things are on this one. So it's like, at this point, what would you do? Just pick any paper. Just look. Don't look even behind you. Just take a paper and audit that one. That would be a sample. This is basically random sampling, right? It's random. You look there and just pick one. You don't know whether it's going to be blue, white, yellow, pink. You have no idea what this paper is. It's, even if you use judgmental sampling, it's still a sample. You are not likely to find anything with that one. Now, this brings us to exceptions. This paper, this is taken from the paper that supposedly and hopefully you have read. Yes?
Another question, like, the very beginning of the paper you talked, the introduction, you talked
Which one?
successful exceptions, identifying, prioritizing,
I'm not, I did not get to that one, but go ahead.
Okay, you discussed about this phenomenon of big data necessitates a different approach to auditing.
I don't want to talk about big data at this point because it's totally different. I don't want to talk about big data at this point. So at this point, I'm trying to make it as simple as possible so that we could all get some, basically, something out of this. So I'm not going to try and make you expert in a certain methodology today. That's not what I'm trying to do. I'm just trying to show you that there are certain areas of research where you might find it interesting. Okay, this is my goal from today. Now, this is from the Siemens paper, and it simply shows, and I don't want you to basically spend a lot of time on it. This is simply that it shows you that those ones here are SAP, which are the company's enterprise resource planning systems. Those are the ERPs of the company. Okay, and then you have the continuous auditing that will generate all these alerts. This is not sci-fi. This is not science fiction. This is happening today. Siemens, they use the system, and actually they improved it. But the part that is done by management, you see management, they have more money than auditors. They have the money. They control the company. So what they do is they implemented, and if you remember Jason from the W cars, that was in November. I know you were all awake and all listening to all the presentations during that time. But yeah, right. Yeah, right. Anyways, so to give you a recap of what Jason said, Jason was telling us about a project, about the system that would every day analyze all the transactions that they have, identify all those exceptions, and then send those alerts, those red alerts, basically those red flags, to the auditor. As you can see here, you have the management and the audit team, etc. So those are the people who are in charge of it. It's not like they are going to execute the person who did that from the first time. But if there's an error or a mistake, you have the chance of fixing it before actually getting to the point where you are closing the books. So you fix everything in advance. And this alarm does not stop. It's not like your phone where you can just hit the snooze button. You can basically hit the snooze button, but you cannot switch it off. So it will keep ringing every night. It will send you an alert to you as well as to the management and to the internal audit department. You will see those alerts every day until the case is closed. And when does the case gets closed? When this transaction is no longer an exception. So basically, if you fix it, it means that automatically it's not an exception anymore. And this is happening right now. So they analyze every day. They have all these alarms. And they try to use it, and you can see that in the paper, that they try to use role-based control, basically, a role-based alert system. So they would send it to the person who is in charge of that department or something like that. Yes, Fred?
And we divided the exceptions into different groups. For example, all those exceptions are in the same group. So it will happen today and give you a alarm, and you try to fix it during this time. But during this time, this same group exception will happen. So it will not give you the same alarm. Just told you how many more exceptions in this group increased, but not give you the same alarm.
If you have fixed it, if you worked on it and fixed it, it's not an exception anymore. So you won't receive an alarm about it anymore.
I mean, during the time you try to fix it, it do not give you the exact.
It will keep reminding you. It will keep reminding you and sending you alerts until it's closed.
Like exceptions together.
Oh, you mean if they are related? If they are related?
Yes, related. Just give you the number, not the detail of the alarms, so you can have less information.
Well, last time they said that they had like 100 auditors working on these things, but they don't want to do it because they work this is the finance department. I think it's financial services. Financial services, so they are dealing with money. They don't want to limit that. They can't do that. They can't just do, for example, making it once every week. That would solve this issue at this point, right? Rather, because it will give you enough time. But they don't want that. They want to have strict control. And they are doing that.
They have to, because they're under strict oversight. Siemens had a huge lawsuit a couple of years ago, the Department of Justice. So
It was the FCPA, right,
Yeah.
thing? Yeah. So they were basically, they bribed someone in Germany, wasn't it? Yeah, and they were sued for billions of dollars. Yes.
Is it possible to give the exceptions an identifier? Say this exception is like referred to receivables, and it's identified like you give it a number,
You mean if it is recurring or if it has been closed or not? Yes, they do that. They do that actually because like at this point they're not going to the internal audit department, they're not going to immediately start auditing you. They will give you a leeway. Although they are receiving the alerts every day, but they give you some time until you fix it. At that point, let's say that a month later they are still receiving those alerts, then they will come and audit you or something like that. We are not privy to that detailed information. We don't know it exactly how they do it. But we know that, I remember when I was talking to Jason, he was saying that what they do is they don't immediately, the internal audit department, they don't immediately interfere, although they are alerted. And if after a certain period of time, this exception is still open, it's still existing, then there's something wrong with it. At that point, they will basically either an internal auditor or like the supervisors or a manager or something like that, they would interfere and then they would look at it. But that gives them a chance of basically doing that in advance. So here, their solution to the alarm flood was to hire more auditors. But this is Siemens. They can do that. They have hundreds of auditors, so they can afford that. Not everyone can do that. That's the point. Yes, Yulin. Not. Well, this is a tricky question because it is costly, and there aren't many studies that show, for example, that it has been implemented completely. There are surveys. Most companies, they would tell you that they have some sort of continuous auditing. So continuous auditing, continuous control monitoring, etc. So they have some sort of analytics that they run on the whole population. Remember that most of this work is done by internal auditors, not external auditors. It's very tricky to get external auditors to use that. And there is a reason for it. Auditing is a standard-driven profession. So the external auditors, they still have to follow the same standards, the same auditing standards, regardless of whether they do continuous auditing or not. So basically, continuous auditing would have to be something in addition to what they do. Not all companies can afford that. And as you can see from this example, most of the time this is based on ERP systems. Not all companies can afford to buy something like SAP or something like that. Ahmed, you had a question? So this is one of the things that if you see the motivation from Siemens in the paper, they talk about their motivation. Their motivation was that they wanted to save money. So on the long run, but this is an investment, whether you can make the investment now or not. So this is like automating a certain procedure. Yes. No one can answer that question. You never know. Yeah. So basically this, well, it's when you are pushed to do that. It's either when you are required to do it. No one likes, like Miklos always says that, no one likes to be graded. So even the management, sometimes they don't want to be under scrutiny like this. But in many cases, it works as a deterrent. This is one of the projects with Itaú, for example. They had those branches where they analyzed the data and they saw that they sell. Itaú is a Brazilian bank where they sell products like think about as insurance policies. Okay, so this product, if the branch sells it, the branch manager, for example, gets a certain cut or a percentage, a commission, something like that. However, the client has the right to cancel it, let's say within 2 weeks or within a month. So they found out that there was a high rate of cancellation in certain areas. They analyzed it. We did it, actually. So we did it for them. So we analyzed the data for them. And later on, it turned out to be that there was some kind of collusion where they would give them the product. The client would cancel it 2 weeks later. It was with the same people. Actually, 2 branch managers from that bank were fired. Guess how many they had the next year? No, they had a couple of them. but a couple of them only, and they were many of them were actually legitimate. It worked as a deterrent by itself. They had not captured that before with traditional auditing. When they implemented this continuous auditing system, they were able to identify these things. So here, what we're talking about is how do you deal with the exceptions when you have all these hundreds and thousands of exceptions. How do you deal with them? Are you still going to do like the lady over there, just grab a paper from behind you